The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Juliana Tattlebaum. These are your headlines. Nvidia announces a host of deals with South Korean heavyweights, deploying a more than 250,000 Blackwell AI chips ahead of CEO Jensen Huang's address to the APEC summit.
Two of Silicon Valley's big hitters post Q3 beats. Apple bullish on iPhone sales, while Amazon records its fastest cloud growth in years. Meanwhile, the ECB keeps rates on hold at 2% for the third meeting in a row, with President Christine Lagarde telling our affiliate Class CNBC Europe's economy is on the right track.
We are in a good place. I said that. We have been in a good place for a little while, and we continue to be so.
Happy Halloween, everyone. For me, what jumps out, the market has been a little bit spooked this week around the huge capex spending that we've seen from some of the Silicon Valley titans. And as a result, even in session yesterday, saw a little bit of a wobble in some of those stocks. Others, where they've blown past expectations, even with a big capex program, those stocks have moved aggressively. To me, this morning, we have a very big story unfolding, that is around Nvidia. A lot of the problems have gone right back to Nvidia, whether there are too many circular deals, whether the company can sustain the incredible pace after hitting $5 trillion in market cap this week. And this morning, we kick off the day with a huge announcement of 260,000 chips, a deal with the South Koreans. And it goes right across industry with the government. And effectively, you do the maths on that, and there's, 30 to 40,000 per chip. You're at a deal that is worth over $7 billion.
What's amazing is that this deal has come just after President Trump concluded his trip in South Korea. And to your point about this happening across the industry, but also when you look at the relationships that are building and developing along diplomatic lines, the fact that President Trump has looked to use this opportunity in the Asian region to strengthen ties with South Korea, with Japan as well. And then on the back of that, you see a deal like this announced, which has tremendous implications for corporate. So we're once again just seeing this line between private and public blur a little bit under the Trump administration.
And if you take a look at the semiconductor index on the back of what we've seen this week and pulling together tech earnings with this mega announcement today and the trade deals, the tour that President Trump has been on, the stocks that have come off on that semiconductor basket just as we've had this mega news around Nvidia. So I think that is fascinating, even with all the news flows telling us that the hyperscalers are still building, they're still investing because they think that they need extra capacity so they don't lose market share. The Philadelphia Semiconductor Index down 1.5% in that overnight session. So what will we see on the back of this Nvidia news today? What does it do in the lead up to Nvidia numbers? I think that is fascinating. Well, just to the point, Nvidia has announced it will work with Samsung to create a new AI mega factory. As part of the deal, the South Korean company is set to deploy more than 50,000 Nvidia GPUs, and the two companies will collaborate on high bandwidth memory chips. Hyundai will also use 50,000 Nvidia chips in its new AI factory, and South Korea's presidential office says more than 260,000 GPUs in total will be deployed across the public and private sector. Let's get out to Arjun for more. Arjun, this is huge news, and the points I've been making here is that the market has been somewhat cautious on what more Nvidia can do to pump its earnings, and this is a huge announcement.
And it all started with a fried chicken and beer date last night between Jensen Huang and the chairs of Samsung and Hyundai as well. But it's a massive deal. And we've seen this year Jensen Huang traveling all over the world, from London to Paris to the Middle East, and now in South Korea, striking up these huge partnerships. And these are giant companies. These are not only companies that are big in South Korea. These are also companies that are key to Nvidia's own supply chain. Samsung, with high bandwidth memory, it's hoping to supply to Nvidia. SK Group as well, which is the parent company of SK Hynix, the chip giant that's also providing high bandwidth memory to Nvidia as well. So it's very invested in the Korean market. The deal could be worth a lot of money, but again, it entrenches Nvidia in that global AI technology stack, which has become so critical, of course, to so many countries around the world. There's deals with Samsung, which are interesting, deploying GPUs to build these huge data centers, which will help with further chip manufacturing. There was talk about partnerships around robotics. So the broader story this week has really been very much Nvidia at the center of this global technology story. And if we read through what we've heard from big tech as well, that very much supports the Nvidia story to some extent as well. Overnight, we heard about Amazon, of course, and a big growth in the cloud there. We saw Microsoft and Google also reporting big cloud growth. Amazon saying it was going to increase CapEx. So all of this is filtering through effectively to the Nvidia story, and the fact that a lot of these companies, when they're saying they're going to increase CapEx, means they're going to be buying Nvidia chips as well. So really fascinating. The partnerships in South Korea are pretty key, not just for expanding Nvidia's own market, but certainly, as I mentioned, from that supply chain side with the likes of Samsung, which Nvidia is hoping will bring out its next generation high bandwidth memory, and of course SK Hynix as well, guys.
Arjun, we are waiting to hear from Jensen Huang himself, so I'll just put that out there in case he does start talking. But you've got the message on the Halloween dress today, and to me there has been a lot of trick or treat in the markets around AI. They're wondering whether this overinvestment could be a trick for investors that have been following the hyperscalers into investing in this space, or whether in fact it's going to be a treat. And the reality today, as we see yet another massive reinvestment cycle, it feels as though it could be more treat. And I do wonder, as we pull together the different threads, and you mentioned Amazon, I was looking at that too, the 90-odd billion in CapEx for the first 3 quarters, largely on AI projects. This is an investment cycle like no other, right? And just to put this into the mix around China, typically China would be part of that reinvestment side. But on the trade talks this week, we didn't necessarily hear that there was a breakthrough around Nvidia and Blackwell chips. How do you think the Chinese would be feeling, given that near neighbors are inking big deals with Nvidia?
No, you're absolutely right. And this was fascinating. I mean, President Trump and President Xi met. President Trump said that Blackwell, the most advanced Nvidia product right now, was not part of the discussions, and effectively said it's up to Nvidia to go to speak to China about this and see what's possible, and that the U.S. government would be, I think he said, a referee or an arbitrator of some sorts. What we know is that China's not getting their hands on the latest Blackwell chips. But the question is, will Nvidia bring out a downgraded Blackwell chip? Will they just stick to the H20, which has been the product they've been allowed to export to China? But the issue here is not export restrictions anymore. It's what China sees as the longer term goal. Remember earlier this year, the US effectively granted Nvidia licenses to send the H20 chip to China. But it was Beijing that was discouraging the local firms from buying Nvidia product and instead trying to buy domestic product. You can read through here to companies like Huawei, of course, as well. So the key is China now going to allow its local companies to buy Nvidia chips? Is it trying to hold out? And this is another part of the theory. Is it trying to hold out for a time in which perhaps Nvidia brings out the Blackwell to China, even if it's more downgraded? It would still likely be more advanced than the current H20 that's being exported. So there's lots of games being played here, no doubt, from both sides. But I think longer term, the direction of travel from China appears quite clear. It is that they are really hoping that their domestic chip firms can come out with products that are able to match what Nvidia is doing. This is not the case today. There are a lot of roadblocks as to why Chinese companies might not be able to get to the performance that Nvidia has. One of those, of course, is manufacturing. But another is around the fact that Nvidia has become so strong with this software ecosystem called CUDA, which it's created. And so lots there to consider for China. Direction of travel long term is around, of course, trying to do domestic chips, but a lot of wait and see on whether Nvidia gets access back to this market, guys.
Arjun, and in breaking news, Jensen Huang is not wearing a leather jacket today. He is wearing a suit. We typically don't see that. As you know, we've seen every version of the leather jacket. I know that is breaking news, isn't it, as Jensen Huang takes the stage today. Let's see if we can dip in shortly, and you can see the crowd is ready. It's the photo shoot opportunity. We've both seen that firsthand at all the tech events. Everybody's keen for a photo with Jensen Huang. He is the rock star of 2025, a different type of rock star from what we're used to. But for the tech bros, for the tech crowd, and the retail investor, I'll throw that in too. I mean, he certainly is the rock star, isn't he? And currently on stage holding court. And it looks like it's a very casual kickoff today. Are we going to dip in and take a listen? I think we are. No, we're not. We're going to come back to it. Okay, let me just push on then while he does his intro, Arjun, because one of the points I wanted to raise, and you and I have both heard this, sovereign AI. That was something that Jensen Huang saw as another growth area. This story out of South Korea today, it's a bit of sovereign AI because the government is investing, but it's also commercial, isn't it? It's around chips, it's around Samsung, it's around autos, it's around devices. It feels as though there's a fairly huge commercial side. Let's try and listen into what Jensen Huang is saying.
Our journey started over 30 years ago to invent a new way of doing computing. The computing approach that we created and invented is called accelerated computing. We recognized years ago to create a new computing model to solve problems normal computers cannot. It has another benefit that when Moore's law runs out of steam, it could be the path forward for the computer industry. 33 years later, as we continue to be able to create more transistors with every generation of process technology, and even though transistors' performance and power benefits have slowed tremendously, we could now continue to expand computing for as far as we can see because of accelerated computing. We are now seeing a platform shift. This platform shift was the reason for creating the GPU and inventing the model we call CUDA. However, a GPU alone is just a chip. This new computing approach requires tremendous amounts of algorithm software to be developed. We call it CUDA-X libraries. Very few people talk about this, but this is Nvidia's treasure. These libraries make it possible for us to apply accelerated computing to computational lithography, the work that we do with Samsung, or in deep learning and robotics, the work that we do with many companies here that I'll talk about. It allows us to do quantum physics, it allows us to do quantum computing, molecular dynamics, fluid dynamics, robotics, of course, artificial intelligence. These libraries open new markets for our company. These libraries are precisely the reason why NVIDIA's computing approach is now available all over the world in so many different industries. But it started from a very humble beginning. And so I made a short video for you to give you a feeling for what NVIDIA's technology can do today. It has been 33 years. In fact, I've been coming to Korea, NVIDIA came to Korea 30 years ago. We invented the video game industry together. I introduced GeForce here to Korea 25 years ago. And last night, we had a big celebration with the esports gamers and PC gamers here in Korea. It was incredibly fun to celebrate GeForce 25 years of GeForce. And so I made you a short video, but as you're watching this, remember, nothing here is animated. Everything is simulated. Everything I will show you is mathematics, computer algorithms that make it possible for us to do what I'm about to show you. Please run it.
Okay.
It's all about mathematics, was what Jensen Huang was just telling us. And Arjun, I think the big themes we've seen Jensen Huang talk about even earlier this year in Paris, quantum computing being in the future, of course, robotics, the sovereign AI story, the chip story. He weighed in on all of those areas that NVIDIA is touching right now. For me, it is so fascinating for the investor to try and work out whether this is a $5 trillion company that justifies that market cap, whether it should be bigger from here, or whether some of those AI fears are going to catch up with it. What do you think?
Yeah, and look, this is all about narrative here, right? Look, if we just look at the numbers, it's Jensen Huang, it's Nvidia making money right now from selling those GPUs. And the margins are high. Everybody wants a piece of the action. And that's quite clear. What Jensen Huang has been doing this year is trying to tell a story of Nvidia that's more than just GPUs, that's more than just hardware, that it's a company that's going to, name a buzzword, it's a company that's going to be involved in it, whether that's quantum, whether that's robotics, and whatever those future industries are, autonomous cars, etc. And so you have seen a number of partnerships, you've seen a number of talk around all of these different areas, because it's quite clear that I think Jensen Huang wants to future-proof Nvidia. There's lots of questions about, what happens in a market where there are more challengers in this chip space and when there is a number of startups trying to challenge, and when it comes to inferencing, for example. And so, very much here, Jensen Huang is saying that this is a company that can be at the center of whatever the big next paradigm shift is, whether it's quantum computing, robotics, whether it's autonomous cars. And that really seems to be kind of what he's playing at in all these various trips we've seen him on this year. And it's interesting, with South Korea in particular, we talk about things like sovereign AI. There's a lot of countries who are they talk about sovereign AI in the sense that they want data centers built on their soil. But actually there's more to it, because there's one part of the equation when you talk about sovereign AI, you want it to be built by companies, or majority built by companies that are of that country, right? But actually what you're seeing with sovereign AI is a lot of it's still being built on American technology. It's being built on Nvidia chips and Amazon and Microsoft data centers, for example. And so the difference with South Korea is it genuinely has a chance to build a sovereign AI because of the kind of companies involved. You think of SK Group with SK Telecom and SK Hynix, chip maker, telecoms giant, to be able to build the data centers. And you think of Samsung with chips and other things as well. It's a pretty interesting equation over in South Korea for Nvidia, and they see that as a pretty big market.
Arjun, you make some terrific points there, just bringing it all together, how the company has partnered with every company on the planet does put it in pivotal position for any new trends, and getting just beyond the GPU story. I mean, the CPU story came into the mix with the Nokia equity stake this week. So thank you for bringing that all together for us. But in the meantime, a lot of the market participants have been trying to work out what to do with AI this week.
They have, and I think the key takeaway from the action we've seen on Wall Street is that the market is not giving carte blanche to AI spenders. That's what we saw in yesterday's trade, with Meta putting in its worst performance, worst daily performance since October 2022. So some skepticism building around Meta in particular's major AI capex spend. When you put it all together, the Nasdaq pulled back 1.6% yesterday. So the pullback in Meta overshadowing the strong gains that we saw in Alphabet. S&P dropped about 1%. 7 out of 11 sectors in the S&P 500 were negative in the session, led to the downside by consumer discretionary. That basket of stocks was down about 2.6%. The Dow Jones holding up a little bit better, dropping just 0.2%, or just over 100 points. In terms of the Asian trade, we have seen more strong gains for the Japanese market. The Nikkei 225 up more than 2%, hitting a fresh record overnight. The Shanghai Composite over in mainland China pulling back by about 0.8%, and the Hang Seng in Hong Kong also trading on the back foot. And the Kospi over in Korea up by about 0.5%. In terms of European trade, yesterday a much more muted session in Europe than what we saw stateside. The Stock 600 ended little change, down 10 basis points. The CAC 40 in France underperformed, pulling back by about 0.5%. Now this morning it looks like we are going to follow Wall Street further into the red. We're looking at modest losses across the board when European markets open this morning. Coming up on the show, the ECB holds steady as economists question whether the central bank is finishing cutting rates, or finished, I should say, cutting rates. Plus, we focus on the outlook for SAP and ask whether it can challenge rivals stateside. And we'll dig into results from CaixaBank with CEO Gonzalo Gortazar. Don't miss that conversation right after this break. Welcome back to the program. CaixaBank has reported an 8% decline in net profit in the third quarter, in line with expectations. The Spanish lender pointed to the impact of the country's bank tax, which was increased in late 2024, alongside lower lending income on the back of falling rates. Let's welcome Gonzalo Gortazar to the program, CEO of CaixaBank, for more on the numbers. Gonzalo, thank you so much for joining us this morning. So when I look at your Q3 profit numbers, perhaps a little bit disappointing, in line with forecast, but down 8%. But then you've got this big share buyback that you've announced. So walk us through the quarter, in particular how lending has progressed in a lower interest rate environment, and how you came to the decision to return cash to shareholders.
Sure. Good morning. Thank you for having me. A pleasure to be here again. And we are very happy about how this quarter went. Actually, I've been reading the analyst notes this morning. Most of them agree that the results are very solid and ahead of expectations, 3% ahead of expectations. Actually, it's the 7th consecutive quarter where we beat expectations, maintaining return on tangible equity around 18%, cost income below 40%, nice growth, solid growth, recurrent growth, business volume up close to 7%, both in terms of loans and customer funds, asset quality under control. So at this point in time, actually all the right things in place.
Talk to us about your NPLs and how your non-performing loans have evolved over the course of the quarter.
NPLs have come down during the quarter, close to 200 million euros. The NPL ratio now is 2.27%. Coverage up 3 percentage points to 72%. Trends are very good. We have no cockroaches currently in Spain, and we're hoping that no one will cross the Atlantic.
Oh, good way of putting it, Gonzalo. Good morning to you. Let me ask you about the interest rate environment, because I can see some of that income from interest declined as we've seen a drop in the ECB deposit rate and other key lending facilities too. What do you see from here? Because the message from the ECB yesterday was that they're in a good place, unlikely to move from here unless they're disrupted by other external events. So what do you make of that outlook for the interest income?
Well, what the ECB said yesterday is very much in line with what our thoughts were. So no surprise, sort of a stability around this 2% level. I think it's an attractive rate for the economy. For us, it's implied a pressure in net interest income over the last 5-6 quarters. But actually, in this third quarter, net interest income is up again 1.4%. As again, the volume expansion, which is strong, given the dynamics in the Spanish economy and our market leadership position, this volume dynamics is offsetting the pressure from lower rates and repricing, particularly our mortgage portfolio. So the expectations going forward, pretty solid, good. Clearly, we have seen the inflection point here.
Gonzalo, that change, though, in the cycle does put some pressure on banks to find other opportunities to grow the business. And the reality is, across Europe, we've seen efforts to try and consolidate. A lot of those efforts are being thwarted by regulators or by shareholders themselves. Do you think we're going to be still in a fairly acquisitive environment for banks from here?
As you said, I think many banks are having nice profitability and having question over growth perspective. So M&A makes sense. When you see it from Spain, the good news is that we have a growing market. So I think it's unlikely to affect Spain or Portugal, this consolidation for the near future. But generally, the trends are there. It makes sense. And we would be seeing from time to time consolidations or maybe just consolidation attempts, as it's been more fashionable, unfortunately, this last year.
Gonzalo, let me come back to what you said at the end of your answer to my second question, that there are no cockroaches in Spain. Clearly a nod to Jamie Dimon's recent comments around the U.S. and the credit market there. Do you think that there are more cockroaches in the U.S.? Should we be concerned about credit quality?
Well, the U.S. is a question. We're seeing that the economy is actually much more resilient than what we would have thought at this stage. At the same time, there is obviously significant reliance at this stage on AI, which is a good structural thing, but there are voices that suggest that there may be a bit too fast and too much. So it's something to watch. I honestly don't know. And it is something to watch because obviously the U.S. economy has profound repercussions globally.
Well, I think the couple episodes of issue a couple of weeks back with First Brands and Tricolor certainly raised some alarm bells, and even European bank CEOs weighing in, European bank analysts trying to figure out whether we should be concerned about European banks' exposure and whether there are concerns in Europe. It sounds like you're not concerned, certainly, about Spain, but do you think there's any reason to be concerned about credit in Europe more broadly?
I think Europe is doing reasonably well. Obviously, there's stagnation. And when you look at particular sectors, some of them are under intense pressure, particularly those in sort of Central Europe, very energy dependent, where there's some economies, particularly the Chinese 1%, a threat. So it's something to be watching for. I think in the short term, I don't see particular areas for concern, but it's certainly our job to be vigilant, and will continue to be.
Gonzalo, let me ask you about growth in Europe, because for me, the last couple of weeks have again just magnified some of the structural issues that Europe faces. I mean, we saw out of Spain, still one of the growing economies yesterday, but coming off the back of some very strong numbers. Labour market rigidities means there are structural issues still in the Spanish economy. Italy has structural issues if it wants to break out of stagnation and needs to find some reforms. When you look at one of the big efforts around the Savings and Investment Union, this is meant to be bringing a lot of the benefits to capital markets in Europe. Do you think it's got any momentum, and are you hopeful it's going to do anything to help reform Europe?
Well, it is very important. I think it does have momentum in terms of the intention of policymakers. There's no question about that, and I very much welcome, and I think the whole industry is trying to help and support, but the big moment of the truth has not yet come. Obviously, it's going to mean that nation states need to give away some sovereignty in certain areas, and that's a big thing for them to do. But the EU is pushing. I think there's many people that have this direction very clear. So it is now or never, probably, and we need to try hard.
Gonzalo, on that point, what are you hoping that Europe can achieve in 2026 as we look ahead to next year?
In terms of building Europe further, I think obviously defense and security is the main area of concern for Europeans at this stage, and where we have more sort of common ground. And I think it's important that we move decisively in that front. And with respect to the Savings and Investment Union, I think the creation of in what we've called a Finance Europe label, but basically incentivizing saving, long-term savings, and mobilizing savings into sort of productive investments is the critical thing.